Hi everyone, no news today, so let's get straight into the data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So starting off with fear and greed, you can see we really didn't move very much. Previous close was 74, we did move down slightly. Still extreme greed across most of the indicators. Breadth has been in regular greed for a while. Put call ratio still here in regular greed. Volatility ticked up slightly, but nothing crazy. Safe haven demand back into regular greed here, and then junk bond demand, no changes. Been in extreme greed for months at this point. Moving over to seasonality, you can see here for the 22nd, we were expecting a slight rise based on the charts. We are in an election year, so sideways chop is also a potential, but slightly bullish here into the end of the month, or sideways chop with a slight dip at the end. And that's basically what we're seeing, except for the Russell, which did dip pretty hard. We didn't see that mid-month dip on the Russell. Maybe that's just coming in a little bit late here in terms of seasonality, but overall pretty much in line. Moving over to max pain, you can see we ended up finishing right at that 520 mark. You can see a call strike here at 520. There was a 515 and that went down a lot on the day, but 520 ended up holding. 530 definitely holding. We didn't finish at the top of the puts or anything, so it wasn't super bullish, still in this mid-range. Total options finished up around 1.6 million. Put call ratio still very high. So there's no major peaks, but you can see in terms of volume, there's still quite a few to the downside. So mid-range finish, which means neutral price action going into the start of next week. Moving over to the charts, starting off here with the S&Ps, you can see we did dip here in the pre-market, tried to bounce in the mid-session and then fell again. Similar to yesterday, actually rallied mid-session, dipped in the end. So a little bit of selling coming through, and you can see those candles at the end of the session. Got the 55 EMA sitting at 519.95. That would be the level that I'll look for to see if that's going to hold. And then looking at the daily chart, 516.67, got some trend support in that same zone, 517.77. Momentum still bullish. RSI pulling back a little bit. Volume stepping up on that selling. Really at this point, you can see we haven't even quite filled the gap on a closing basis back to that Wednesday. So would expect that to fill. That's around that 520 level. Expect that to fill, hit the 55, and then we'll see what's going to happen from there. But you can see all that volume on the most recent candles selling here over the last couple of days. Doesn't mean the uptrend is not still intact. It definitely is, but it does seem like a short-term pullback, at least into that 9 EMA area, might be due for the Monday session. And then looking at the tasty charts here on the hourly, you can see with that selling pressure, we took out the ATR stop, so that's slightly bearish. And then you can see those big volume candles at the end of the week. Definitely some selling coming through. Got the 55 EMA on this chart sitting at 520.32. And then that bottom ATR band sitting around that 519.60 area. So need that area to hold if it's going to do it. Otherwise, this might be a little bit longer term downtrend based on the hourly chart. Moving over to the NASDAQ, slightly different thesis. Dipped early in the pre-market, held that level, bounced mid-session, got almost up to that trend line, didn't quite touch it. On the shorter time frames, I believe that it did. You can see here on the 5-minute chart, it was awfully close to that trend line. I would call that a touch. And then we ended up breaking down from that. So that's slightly bearish, especially if you look at it here on the daily chart. Definitely does not look great. Big breakdown of that trend. We're retesting here. Couldn't get above it and hold. Tried to on the Thursday session, tried to again here on the Friday session. We'll see how that plays out. So definitely a consideration for the medium time frame, and you can see slight bearishness here on the short time frame. So we'll see how it plays out. We're still above all the EMAs and SMAs, which is bullish, and you can see momentum still rolling to bullish, but definitely consider that breakdown retest, potential further breakdown. Moving over to the Russell and the Dow, you can see the Russell sold off 1.38%, pretty substantial. Momentum rolling back to bearish, not great. Breaking down below the SMA here as well. Kind of looks like a lower high here from that wick on the 8 March candle. Big wick above that trend line. Didn't make it back to that trend line. Did not get above 208.22, so that's concerning. We're still above all the EMAs and SMAs, and you can see there's going to be clear support here in that 204.60 level, but we closed on the low. Definitely some bearish signals there on the Russell. And then looking at the Dow, also lots of selling, 0.81 to the downside. Momentum has been a little bit weird here. 2 really strong days, and it did step up slightly. RSI breaking down substantially though. Trend support in that 393.50 area. Again, there's no levels in here because this is all-time highs. I would probably add a level here at these previous wick highs around 392.30 or so, but right now trend support 393.40. Moving over to the MAG7 on the other hand, this was bullish on the day, 1.28%. Momentum continues to roll to bullish, RSI looking good. We're right at those all-time highs, looking to push higher up to that trend line. That's going to be 380 or so. And then you have that longer term trend line sitting up there around 389.60. We'll see if we can get in that zone, but this is clearly accelerating and it still looks strong. Moving over to Apple and Tesla. Apple actually caught a bounce here, 0.53. Down massive yesterday, 4.09. We talked about it in yesterday's video. But here today, caught a little bit of a bounce. Seems like 170.90 is an important level. It's held it on multiple tests. Tested it yesterday, tested it again today. Tested it on Wednesday the 13th as well as Friday the 15th. So there are still some buyers in here on Apple at that level. We'll see if it can hold up. Otherwise, 165.71 is the next level. And then Tesla down 1.15%. We talked about hitting that 177.70 level. Still very much a downtrend. Hit 163.34. Ended up bouncing a little bit from that level. You can see it here on the hourly chart. Touched that level, overthrew it in the pre-market, rallied back up into the middle of this kind of shorter term range here. Momentum slightly bullish on the shorter time frames, but still well below that 200 SMA at 172.75. Moving over to Broadcom and NVIDIA, both of these were bullish on the day. Broadcom 0.41, momentum rolling to bullish. Wasn't as strong as I would have expected it to be, but still positive, and it's up after hours. NVIDIA 3.12%, very close to that trend line at 952 or so. Momentum rolling to bullish, RSI breaking higher. Everything looks strong on semis, continuing to lead markets higher. Moving over to staples and discretionaries, both of these were down on the day. Pretty interesting. So staples 0.49, still well above 75.40, but it closed on the low. Does not look great. Momentum and RSI looked bearish, retested that trend line, potential breakdown there. 21 EMA sitting at 75.25. We'll see what happens at this critical point. This would be a pretty powerful double top if we did break down here. And then looking at discretionary, similarly double top looking setup right at resistance 185.36. Island reversal, gapped higher, fell, gapped lower, fell some more. We'll see what happens now. Momentum not reflecting that move yet. RSI breaking down. 21 EMA sitting at 181.50, and that does not look great. You can see the last time we got into the zone, big breakdown. Testing it again, big breakdown. And if we see both of these moving down over the next week together, that could be a very bearish indicator. Moving over to the breadth indicators, you can see 20-year breadth selling off pretty substantially. Again, we did not get to that 86.50 level. Thought we might get there today. You can see the momentum swinging up, but then we got a step down, RSI breaking down, right back at that 21 EMA. Pretty interesting. Again, double top looking setup, and then looking at the 50-day, same thing here. Got the wick high on the 13th, tested that level yesterday, then sold off from that level here today, back below 77.46. And if we do start to break down further, that's going to be a lower high setup, and that could be quite bearish here on breadth. Moving over to the put call ratio, look at this ratio here on the overall markets. We got a massive spike. The high of the day was 1.63. We did pull back to the 1.3 area, but you can see this is accelerating here to the upside. Definitely seems like markets are shifting a little bit to the bearish side, which is pretty interesting considering that markets are at all-time highs and just now showing a little bit of weakness on the shorter time frames. The last time we got a spike into this level was back here in mid-February, and then realistically the big spike we saw was here at the beginning of October, and that was really the start to the most recent run that we had here. So we'll see how that plays out. Definitely be aware of it. If we start to see some bigger spikes here, potentially into that 2 range, that could be the start of something weaker. Moving over to the dollar, we're getting a ton of dollar strength. We talked about the massive up candle yesterday, got another massive up candle here today. So this has been a very powerful run from 102.7 all the way up to 104.4. Dollar strength could equal some weakness here in equities, well above these downtrend lines, well above all the EMAs and SMAs here today. Right at my level, it seems to be holding it here. You can see it on the hourly chart. Broke above it. We're retesting it. Want to see that level hold if it's going to do it. Otherwise, if you're long equities, you want to see a rejection from this level and then see a lower high setup and a potential breakdown for some lower lows back down to that 102 area. But right now, looks like a very clear higher low setup. And now it looks like we're breaking for that higher high up to that 105 area, which could be bearish for equities. Moving over to bonds, you can see we are rejecting from that trend line again, so it looks like we might end up holding back in this range. We thought that might happen. We tested it yesterday and we're rejecting from that level again. Multiple tests of that trend and now we're getting back below it. TLT on the other hand, massive gap higher. Yields continue to sell off a little bit. Momentum continues to roll to bullish. RSI looks bullish. So 92.82, important level, tested it here, rallied up. Next level, 96.50. Moving over to my accounts, you can see I was up a little bit on the day. Fortunately, I did not roll up super aggressive on this IWM, so I had a 205 call for today, and then I captured almost all of that downside here as we finished just above 205, and then I rolled that 205 out to the Monday session for a couple of cents. So I managed to protect myself from basically all of the losses on the IWM, and then similarly here on my poor man's covered call, I did not roll up super aggressive, so I had a 444 call. Still in the money at 446.30, but that was for a $5 credit, so getting some money there. We'll see how that plays out on the Monday session. And then those puts that I had going into the day, they finished in the money like I expected them to. I went ahead and decided to accept the shares on those, and I did sell some calls throughout the day, which did help me generate some profit there. You can see I made some money on the puts, not a whole lot on the day, only $12. The rest of that profit was from selling calls throughout the day. And then I ended up rolling those down and out to 446 for a $1.46 credit. So I'll get the shares here and then I'll have some calls on those shares for the Monday session. And you can see on that, it actually did sell off a little bit. So that'll be slightly out of the money for the Monday open, as long as we hold these levels. Again, neutral here, potentially a little bit of bearishness on the shorter time frames. Let me know down in the comments section what you thought of the charts today. What do you think of the breakdown following the spikes that we saw after the FOMC? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.